This is Matthew Kratter from Trade University, and today I want to answer the question, is Bitcoin permanently tarnished? Permanently tarnished by the whole FTX implosion and the crypto contagion that we're seeing. This topic comes from a discussion I was having with NM in the comments. NM is actually a very impressive hodler. He or she has been hodling since 2013, but even this person is having their doubts now and feeling the pain. He or she said, I know none of the fundamentals of Bitcoin have changed, but I'm worried that the public perception of Bitcoin has been permanently tarnished by these crypto scams. The general public lumps it all together. Now, I would say that over longer periods of time, it actually does not matter what the general public thinks about an investment, and that's what I'm going to be arguing in this video. What matters are the fundamentals and whether the investment is fundamentally a good investment. So smart money will still be buying smart investors, and then the general public, and in many cases institutional investors, will eventually have to catch up. A great example of this is the Death of Equities magazine cover from August of 1979. This was the famous BusinessWeek cover that argued that stocks were basically finished and that you should invest elsewhere. This article came out when the Dow was right here in August of 1979. We can see that the next decade, even the next couple of years, was just unbelievable for the stock market, with the Dow going from around 1,000 to 10,000 by the end of the following decade. So that's one example of real public bearishness and worrying that stocks would never come back. But indeed they did, because they were very, very cheap and they were undervalued in the same way that Bitcoin is undervalued. With stocks, you also had all these huge interest rate cuts that happened, and 1979, 1980 really was the peak in interest rates. So that's another matter. But people were very bearish on bonds at that time as well, for obvious reasons. The other example, which I lived through, was the dot-com implosion. Here's an article about how 1.7 trillion was wiped out in tech stocks. But before I cover that, I'd just ask you if you believe in this channel's mission of spreading Bitcoin education. And if you're finding this video helpful so far, please help me out with the YouTube algorithm. I'm trying to reach as many people as possible, especially during these very bleak times. Hit that subscribe button and like buttons, and leave a comment if you're able to. So I lived through the 1999 to 2002 dot-com bubble. Maybe started, you could say it started in 1995, but 99 and 2000 to March of 2000 had this huge run up, and then a 2-year crash from March of 2000 to, I believe it was October of 2002. And I was living in Silicon Valley at the time, and my wife was actually working in tech as well. I was in finance. You cannot imagine how bleak things were in 2002 at that point, at the bottom. Even in Silicon Valley, even at the heart of tech, where people understood software and hardware better than, and the internet better than anywhere else in the world. Some of the smartest people that I knew in Silicon Valley at the time said that the internet was over, and it's hard to believe that people were saying this just 20 years ago. I only knew one internet mega bull in 2002, and that was actually Peter Thiel. He had the vision. He had just sold PayPal, and he was working on investing his money into things that would become Facebook, for example. But it really depended, this recovery of tech stocks and internet stocks really depended on which stocks you picked. Amazon, eBay, Apple are some examples of stocks that came back really nicely. I believe Amazon had approximately a 90% drawdown before it came back and went up 10x, 20x, whatever it's done. Stocks like Pets.com, which is the famous counterexample, never came back. And they had a decent idea in terms of e-commerce, but there was just not, they didn't have the fiscal discipline, and it was probably a little bit too early because people didn't have iPhones. I would say that the Pets.com of today are the dogcoins, Solanas we're seeing, XRP, Cardano, Ethereum, all these altcoins that I'm always talking about on this channel. And also any company that's storing its value in this garbage. You've been asking me why I'm worried about crypto.com. They just have very bad business practices over the years. Here's the latest disclosure that they hold 20% of their reserves in Shiba Inu coin, in SHIB, which is just, it's unbelievable that a company like this would even take it this seriously. So I would expect the crypto.com stadium to be renamed fairly shortly. Hopefully no one's holding anything there. Let's go back to Bitcoin fundamentals though. So we're arguing that companies that are holding these ship coins, these altcoins, are not going to recover. They're the pets.com of the era. Bitcoin is more like the Amazon or Apple. It's the blue chip. And there is no second, unfortunately, because Bitcoin was this historical, I don't want to say historical accident, but this very fortunate thing that happened. The founder was able to disappear before we had widespread surveillance. It'd be very difficult to do something like this today. So Bitcoin is this very, very unique digital asset. It's the only global money that was not issued by a government or a corporation. You can hold it yourself on a hardware wallet as a bearer asset without any counterparty risk, and that becomes very important in a world when everyone is very scared about counterparty risk. For example, who has counterparty risk to FTX and Sam Bankman-Fried's scam bankster frauds empire. This is something you don't have to worry about if you're holding Bitcoin on a hardware wallet, because there is no counterparty to that. It's a bearer asset, just like physical gold. Bitcoin, you can also send it directly to anyone in the world without censorship or needing to ask permission or getting a login or being allowed on the network. It's an open network. Bitcoin's incentives and social layers we talked about yesterday also ensure they can never be debased through printing more of it. So anyone can come out with a coin and say, oh, it's capped at 10 million. My coin is capped at 10 million coins and your coin is capped at 21 million. This doesn't matter, because you need a decentralized enough situation where no one can come in, or a small group of oligarchs or elites can come in and print more and change the protocol. And Bitcoin, as we've been arguing for years, has this true decentralization. It's very, very difficult to change Bitcoin. When you're dumping your Bitcoin in a panic, and I know you're not, but when people today, over the last couple of weeks, have been dumping their Bitcoin in a panic, they really need to ask themselves who is on the other end buying it. I'm on the other end of some of those trades. Obviously, I've been buying Bitcoin, and I have hundreds and hundreds of videos about why I've been buying Bitcoin and why I like Bitcoin and why I don't like altcoins. And this is the argument I've been making over the past 2 years. I'll link to the video section on YouTube in the description notes below. Michael Saylor and MicroStrategy are another great example. They're certainly on another level from the kind of buying that I'm doing, but they are still buying, of course, and you can follow the updates on Michael Saylor's through Michael Saylor's tweets. You can also read my channel's comments and go through the list of all my Twitter followers. I was very impressed yesterday, the number of people who said they were still buying Bitcoin. They weren't worried at all. They were ecstatic. And these are mostly just regular folks. Some of them become millionaires through Bitcoin, but most are not millionaires or billionaires still, but they're still buying Bitcoin with supreme conviction. And while the idiots in Silicon Valley, while all the over-leveraged institutional investors are being forced to sell, the retail investors, the everyday person, is having a great chance here to get Bitcoin at an undervalued price. Just as anyone could have bought Apple for under $10 a share, that's what on a split adjusted basis, it was much less than that. Same for Amazon. Some of these companies were even trading for the cash on their balance sheet. I think Apple got down to about the cash on its balance sheet. So things can get very, very cheap, as Bitcoin is very, very cheap now, when you have all this forced selling and you have this panic and you have all these wannabes finally leaving the space and throwing in the towel at the absolutely worst time, I might add. You can scroll through my followers on Twitter. A lot of you have been asking. My handle is @MattCratter. They're always impersonators, so please be very careful. But these guys, these impersonators, it's usually a slight misspelling of my name, and they're trying to sell you things like XRP and Shiba Inu, so they're pretty easy to spot. I've been having some problems with Twitter trying to take all of them down. But you can scroll through my followers here. You can click on any of them. I follow a lot of plebs, a lot of really strong hodlers, and they have various amounts of Bitcoin. But these are people who really understand Bitcoin. And I think if you read some of their tweets, it will also give you some strength at a time like this. Sentiment is always the worst near major market bottoms, as we saw with that death of equities, death of stocks magazine cover, all that internet bearishness that I talked about in 2002. And so I would say that when even a smart hodler like NM from 2013 is doubting himself or herself, you can be sure that we're closer to a bottom than you think. But again, if you're still waiting for a Bitcoin market bottom to buy and you want to get that lowest tick price, you're not doing it right. You still don't understand Bitcoin. You should probably be just dollar cost averaging instead, after you've done your research and after you've developed the kind of conviction that we're talking about. Because you really have to understand what you own, or you'll be forced out in panic at a time like this when it's very, very difficult to be a hodler. Just remember that Bitcoin is a scarce, one-of-a-kind asset that will be priced in the millions by the end of this decade. And there are good fundamental reasons for this. Smart money is buying now. That doesn't necessarily mean really big money. Billionaires buying now. I would say more billionaires are selling than buying now. But the smart money, whether it's you and me, the plebs, the small-time hodlers, we're still buying. Let the public, the general public, play catch-up. Let the institutional investors play catch-up in a year or two from now, as they always do. I remember seeing internet stocks come back with a vengeance, and so will Bitcoin. I'm still buying Bitcoin. I've never sold a single sat, and my conviction is as high as it's ever been. And especially seeing Bitcoin at these prices, I was buying all the way up to 69,000. I do have regrets that I don't have more dry powder down here. I obviously never thought we'd get this low, but I think still, even if you paid 69,000 for some Bitcoin, and you think Bitcoin's going to $1 million, that's six or seven pennies on the dollar that you paid. So these are still all crazy good prices. And I still believe that Bitcoin has a very, very bright future, and that hodlers will be rewarded. I think the only annoying thing is when Bitcoin's trading in the millions or 2 millions, we'll have governments trying to attack us, saying that we got rich by doing nothing, and people will just not know the pain and the suffering that many of us are going through watching this huge decline in our net worths in Bitcoin. If you found this video helpful, be sure to hit that subscribe and like button. Hit the notification bell if you want to be notified when I publish my next video, and let me know your questions and comments in the comment section below. Thanks a lot for watching, and I'll see you in the next video.